Hey everyone, I'm Tony with Clarkson Santoro, and this is our weekly real estate update for August 12th. In this series, we update you on the latest trends that are occurring in our real estate market here in San Ramon. Using our more than 50 combined years of experience helping clients buy and sell homes, we explain what those numbers mean for you as a homeowner or as someone who is looking for a house that you will love to call home. The current inventory is 95 homes, down from 105 last week. The average asking price of those homes was $2,027,000, which is up from last week's average of $2,019,000. 18 homes asking an average of $1,909,000 went pending this week. That is more pending homes than last week's number of 16, with a higher average asking price from last week's $1,828,000. A total of 13 homes sold this week with an average sales price of $1,705,000. That average price was down from last week's average price of $2,319,000, and the total number of sold homes was higher than last week's 10. Okay, so now that we know how the market performed this past week, let's look at the key metrics we track that help us understand where the San Ramon real estate market might be heading. The first metric we watch is our current inventory of active single-family homes for sale. Like we talked about last week, inventory levels have been one of the most obvious shifts in the market that point to it being more favorable towards buyers. We went from about 2 years of never having more than 30 homes available at one time to having well over 100 homes available for the past month or so. But inventory started to drop last week, and it continues to come down this week. It is now below 100 for the first time since June, and the number of homes listed as coming soon remains low as well, indicating we won't be seeing an influx of new inventory to drive that number up anytime soon. This indicator score came up to 23 last week, and we will raise the number again to 28 as we inch closer to a normal inventory level. The next indicator we track flows directly from inventory levels, and that is the market turnover rate. When we talk about the turnover rate, we are talking about how long it would take for every active home on the market to go into contract. A typical on-market time is 30 days, so a turnover rate of 1, meaning it will take 1 month for an entire inventory to turn over, is a neutral market. Anything above 1 indicates that we are in a seller's market, and anytime the number dips below 1, it means we are in a buyer's market. At a low of 0.25, we have solid proof we've been in a buyer's market for about the past few months, and it is a stark contrast to the past 2 years of an extremely high turnover. That low number has been climbing though, as less homes are listed, and we are now above 50 pending homes. With the market turnover rate now at 0.6, we are moving quickly back to a neutral market, but are still in a strong buyer's market for the time being. Last week, we raised the score of 25 to 25, and we are raising it again to 30 this week. Over-under asking price is the next indicator we track. The amount that homes are selling for compared to the amount they were listed for has leveled out in the past couple of weeks. This is another sign that we are still in a buyer's market. It is not nearly as buyer-friendly as it was a couple of weeks ago. Sellers have started to make the appropriate value adjustments in their own heads and have started to price their homes more in line with what the market is indicating that a buyer is likely to pay for it. This also means that buyers are soon going to find that they are missing out on homes that they thought they could watch and wait on, as more buyers are considering the list price more reasonable. Last week, we gave this indicator a score of 47, and we are leaving it at the same number this week. The last trend we watch closely to gauge the strength of the market is the average selling price of single-family homes. The weekly sales price average dropped this week, but the more long-term trend line shows that we are back to a small upward trend from the lowest it was 1 month ago. I think that the overall upward trend points more to the fact that sellers in the higher price ranges have finally made the value adjustments to meet the buyer's expectations, so that a larger quantity of higher priced homes have finally gone pending. It also points to a little increase in consumer confidence that I think is bolstered by some of the numbers we will look at in a second, specifically the tech stock market. Last week we gave this indicator a score of 65, and we are leaving it at 65 this week. The first of 2 metrics we pay attention to that help us predict where the market is heading is the strength of the Silicon Valley tech industry. Since the majority of new residents buying homes in San Ramon are employed by tech companies in the South Bay, our housing market tends to move in lockstep with the tech stock market. We watched the Invesco Triple Q Fund to track how the overall tech industry is doing, and since mid-June, when we saw the funds hit its lowest value in 2 years, we have been tracking a slow but steady increase. With the Triple Q fund now sitting at $330 a share, we see the effects on the market here. Buyer confidence is increasing, and so is the number of pending homes. Last week we gave this indicator a score of 45, and we are raising it just slightly to 46. Finally, we track the average mortgage interest rates. This is the only indicator score that we are dropping, as the interest rates have jumped back up to 5.22% this week. The irony is that when we say that our indicator score is lower, that typically favors buyers. But interest rates are really the only thing that negatively affects both buyers and sellers if the indicator score drops. The higher cost of money usually means that houses start selling for less, which hurts sellers. But it doesn't really help buyers necessarily, since they are still paying more for that home in the long run. The one benefit for a buyer when rates climb is that it reduces the competition, which in turn increases supply. If there are more homes to choose from and less people to compete against, a buyer usually has the stronger position in the negotiation. Last week we gave this indicator score a score of 40, and this week we are lowering it to 38. Overall, the market still favors buyers just slightly, but it continues to move slowly back towards a more neutral market. For sellers, what we have seen is that you can start to be a little more confident that if you do the right things to make your home appealing to a wide range of people and set the price competitively, you should be able to sell within a reasonable range of your asking price. It is still not the best market to sell in, but if you need to sell, you are no longer hoping and praying that all the stars align just for you. There's less inventory competition and the buyers are returning. For buyers, we still think this is as good a time as we have seen in the past 2 years to take that last step and buy your new home. You are still going to buy a house below the peak, and you're catching it before things start to climb again. If the market continues to shift back to a more neutral market, you might find your negotiation position undermined a little, especially as inventory continues to dip. But right now, there are enough homes out there that you are likely not going to have to compete directly with another buyer if you do find the house that you would like to call home. Last week we scored the market at 39, and we are raising it again to 42. I hope this weekly summary and commentary helped you understand our market better and how it is affecting you. Let me know in the comments down below, or contact us directly if you have specific questions about how you can navigate this market to sell or buy a home. And if you find this information helpful, share it with a friend, hit the like button, and subscribe so you'll always be up to date on the latest real estate news here in San Ramon. Have a safe weekend, and we'll see you next week with a new update.